So value added tax. We say this. It is tax charged. It is tax charged on value that is added. It is tax charged on value that is added to prices of goods and services. It's tax charged on value that is added to prices of goods and services supplied in Kenya. On value that is added to prices of goods and services supplied in Kenya, currently at the standard rate of 16%. Currently at the standard rate of 16%. We'll stop, continue by saying all sales outside Kenya, into brackets exports, are zero rated. All sales outside Kenya, those are the exports, are zero rated. So VAT, that's what tunasema the supply of goods and services in Kenya. So 16% is when you're transacting within Kenya. But when you transact, when you sell outside, yes, there'll be the VAT, but at the rate of 0%. That's our points to note. Points to note. Number one, output tax. Output tax. We say it is VAT charged. It is VAT charged on sales. It is VAT charged on sales. I'll start continue by saying this. The sale of essential commodities. The sale of essential commodities and exports. The sale of essential commodities and exports always attract a 0% VAT. Always attract a 0% VAT. So tukona zile, I don't even need to mention them. You know, VAT is a topic that you can learn it for 1 month, or you can learn it for 1 day, depending on how you approach it and what you want to write. You always prefer somebody knowing why something is zero rated, so that in case he gets something of that characteristics, and then only 0%, without even giving examples. That's why nimesema essential commodities, the basic commodities. Zile commodities ambazo zinatumika na mwananchi wa kawaida. You know how you define mwananchi wa kawaida in Kenya? That way. Sasa, when I go to the supermarket and I buy fresh milk, VAT yake ni 0%. Because wanasema fresh milk is a necessity. But when I go to buy yogurt or mala, wanasema ni luxury. Nachajua VAT ya 16%. Sasa, maji ya kanjo is 0%. Ukiendea mineral water, bottled water, sio ni luxury. You're getting, there's some aspect of lifestyle plan unajiingiza ndani, sio? That's why you walk around with those bottles, right? Sometimes tunachukua ya kanjo lakini tunapeza bottles tutazifunika. So there's some luxury associated with that. So bottled water 16%, maji ya kanjo 0%. Sasa parking ya kanjo 0%. Parking private 16%. If you get my point. Medication 0%. Sasa hizo madawa tunanunua 0%. Sasa what else we have? Several items need for with those features. Sasa with those features. Nikienda super, nikibuy unga wa ugali, I think this one they favor us. unga wa ugali 0%. Lakini unga wa ngano iko linachajua VAT. Because ugali is never a luxury, right? So ugali is a necessity. Ni necessity hata mtaka kupata. Na sio watu wa Western peke yake siku hizi. Sana sana Western. Sawa, lakini wengine tu amadogo, ndio. Na rice. Rice luxury. Sure, ndio. So ukibuy rice, tunacharge VAT. Ukibuy wheat flour, tunacharge VAT. But maize flour, 0%. So the essential commodities. Sasa, so I always prefer, let us know why it is 0% so that we get something of that nature. We are able to reason out, alafu tuone papiwe. Sasa, then there's this one unique supply that when you make, yake inakuanga 0% when you are supplying to privileged persons. Privileged persons ni kama kina nani? When you are supplying to the presidency. You make any sales to the presidency, you can never charge them VAT, 0%. Sasa, when you make some supplies to the armed forces, that's why kwa tunaambiwa utaka kupata vitu kwa cheap tena kwa zile duka zao, sio? Yeah, because ni 0 rate. Sasa, the diplomats for the first 100 days of their stay in Kenya, wataenda supermarket utachajua VAT because supermarket kwa watu. But now they are allowed to do it, to claim that VAT that they have already been charged. That's how the charitable institutions, you're not required to charge them VAT. They might come and buy those stuff from the supermarket because you don't know them, and even the supermarket doesn't have a special till for them or tailor for them, right? But now they are allowed to do it, to claim back their VAT. That's how. So my point is always, let us know why and when is it 0% instead of giving many examples. So that we get something of that nature, we know how to deal with it. That's how. Number 2, input tax. Input tax. We say it is tax. It is tax on purchases. It is tax on purchases, stroke payment. It's tax on purchases, stroke payment of batchable goods or services. Purchases or payments of batchable. Batchable is not a tax. You have to do that as well. Batchable goods or services. We'll stop, continue by saying, this however does not include prohibited items. This however does not include prohibited items. E.g., purchase of fixed assets, comma, oil and fuel, stroke lubricants for motor vehicles. I'll explain myself. Oil and fuel stroke lubricants for motor vehicles, comma, spare parts for motor vehicles, of course, and other equipment. Still as may come out of vehicles, you can get spare parts for any asset, right? Any fixed asset. Comma, restaurant services. Restaurant services, that is catering and accommodation. So etc. My point is this. When you're dealing with VAT, there should always be an aspect of VAT in, VAT out. I pay VAT when buying, I'll be able to recover that VAT when selling. So yes, if I buy a fixed asset, hiyo duka, no supplier ameniuzia, that trader that is selling to me, to him or her, that is stock. Si akinunua alichargewa VAT, hata alicharge VAT akiniusia. But in my books, because there's no way I'm going to sell that asset, I'm buying to use, that's why it's a fixed asset. That VAT that I'm being charged, I can never claim it as an input tax, but I can only capitalize it iende kwa capital allowances. So if I buy a TV from supermarket to come and put here like this one, ilichargewa VAT. Lakini hiyo VAT siwezi claim under the input tax. Hiyo VAT ambayo nimechargewa nikinunua hiyo fixed asset itakuwa part of the total cost iende kwa capital allowances. So it does not mean that you will not be charged VAT. You will be charged. Nikienda hapa chini Highlands kununua chai ama soda ama whichever thing I decide to buy first floor, ground floor, nitachargewa VAT. Sindio? But hiyo VAT inachajiwa, I cannot claim it as an input tax. That's why it's called prohibited item. That's how. I buy fuel for motor vehicles. They'll charge me VAT at whichever rate, but I'm not allowed to claim it under the input tax because it's a prohibited item. When I claim VAT on fuel, when buy it, when will I sell it to claim it back? Yes, it's an expense. Huh? So that VAT that I'm paying on that fuel, what it said that it is said that claim it as an expense in the income statement, but don't claim it under the VAT account.
I don't get that claiming under the income statement, but the
hapo ni katika fulani Kenya KRA walitumia kutunyorosha na. Because sisi tunasema kwa income statement tax is never allowed. Sindio? Na hiyo story ya fuel wanasema huwezi claim under as an input tax. So as taxpayers you are always confused. This fuel that you are buying, where do you take the VAT aspect? And that's why in most cases, when as a company when I'm buying fuel for the motor vehicles of the business, do you separate the VAT and the cost? Sipani katu kama cost of fuel. Lakini hapo ndani si kuna VAT nimelipa. Sindio? So I don't separate the VAT aspect of the expense that I'm paying on fuel. I always take it as operating motor vehicle operating expenses. Na naipeleka kama expense kwa income statement. So that VAT that I paid in that fuel while buying it, right? We may claim as an income, as an expense in the income statement. Sasa, that company that is now selling the fuel, ile petroleum company, hiyo sasa kwake si fuel ni stock. Sasa wewe ndo ana claim VAT. Sasa, but hapa tunasema nini? Oils and fuels for motor vehicles. Gari za kampuni tumezibaiya fuel na oil, hatuwezi claim hiyo VAT yake under the VAT account, lakini hiyo cost ya VAT inakuwa part of the total cost of that fuel, inaenda kwa income statement. That's an expense. Sasa, yeah, so we don't separate it. That's the point. Ask.
So,
so when I'm claiming the total for the sake of those who are online and the scarce funds game, so najaribu kuambia shilingi sema hizi maswali za muhimu. So for the fixed assets, nimenunua hiyo fixed asset at 100,000. Maybe I was importing the assets. Ndio, I imported it at 100,000. Nikalipa the import duty of 10%. So meaning the total cost would be 110%. 100,000 plus 10% the import duty. So value yake itakuwa 110,000. On that 110,000, if I paid VAT, I also add the 16%. So 110 plus 16%, it becomes the total cost that should go to capital allowances. So if it's a manufacturing machinery, 50% of the total cost in the first year. Sasa, hapo chini niambie kwa VAT payable equals output tax. minus input tax. VAT payable is output tax minus input tax. Number three, tax point. Stroke point of sale. Tax point stroke point of sale. Let me say, it is the point where VAT is assumed. It is the point where VAT is assumed to be due and payable. It is the point where VAT is assumed to be due and payable. And then VAT nalipwa, when is VAT paid? By 20th of the following month still. So meaning VAT ni ya kila mwezi. Right? So let's continue by saying it is the earlier of. It is the earlier of. Number A. When goods or services were delivered. When goods or services were delivered. Number B. When invoice was issued. When invoice was issued. Number C. When payment was made. When payment was made. Either in full or partially. When payment was made either in full or partially. Then number D. In case of metered supplies, in case of metered supplies ni kama gani? Kama maji ndio, stima pia. Hiyo stima yenye si ya tokens. So in case of metered supplies, comma, the point of last meter reading. The point of last meter reading. Na watu wanakuja kusoma meter. So ile time wamekuja kusoma meter. So whichever comes earlier. My point is this. Unapata situation kama hii, maybe on 25th of the 2022, maybe issue invoice. Invoice was issued. Then maybe on 4th of Jan 2023, goods were delivered. Right? Alafu unapata, after delivering the goods on 10th of Feb 2023, payment was made. And all these transactions may be related to an item, a goods valued like 100K. So swali ni, in which month shall we claim that VAT? Is it DEC, Jan or Feb? We have to claim it in DEC. Many people look at this. So whichever comes earlier. So that's why we always have the issues of bad debts. So you claim that you had to account for the VAT before the payment was made, right? Then it was discovered that these goods are not payable. The customer, maybe your customer has become bankrupt. That's why you have the concept of bad debts in finance. So yeah. So in this case, the VAT for this goods should be accounted for in the month of what? Of December, when an invoice came in. So whichever comes earlier. So VAT on bad debts, we claim it. We claim it. It's called VAT refund. So you balance it against the VAT for that month when that bad debt has been declared. So you don't go back, because the going back is in the past. So as long as you have evidence of this person becoming bankrupt, evidence that you tried your best to recover those debts, na imekataa, uko na evidence leo, then you can claim it against the VAT relating to that money. Alright, number 4 still. Point note number 4. We say, in case of an import, point note number 4. In case of an import of a batchable good or service, in case of an import of batchable good or service, the value for VAT for input tax, the value for VAT for input tax shall be the value for duty plus duty. Value for duty plus duty. i.e. CIF stands for China you can C for Harambe. C for cost, at least kunayo Harambe number 1. I for Useme Institute. I for item, income unanyoroshwa, insurance, thank you, and M for right. So see, I have not as the struggle, so I can do input, cost, insurance, and freight. So cost, insurance, and freight plus import, strong customs duty. So import duty and customs duty. So by the way, the cost, insurance, and freight, this one represents, this one is the cost up to the port. Cost is the price in the home country. Insurance is on transit. Now freight is the transport costs. You bought it at how much? You bought it at this figure. See, ikiletwa kutoka that foreign country, lazima to insure transit. Either inakuja na plane, ama inakuja na meli, we have to insure it while on transit, right? Then freight is the transportation costs up to the port. So this is the total cost up to the port, either airport or the seaport, or whichever port you have in your mind. So the total cost up to the port. Then we have to pay the duty before those goods are not transferred to us. And at that point is when we consider ourselves to have made the purchase. So we pay the total cost up to the port, then we pay the customs duty or the import duty. At that point, umenunua. Before we pay duty, bado zinakuwa in the hands of the government. So you pay the duty, then the government hands over those goods to you. At that point, you have bought. So if you have already bought, then charge the input tax. So then after charging the input tax, see if there is any more value that we add to those goods, paka ile point utazisell. Pick up ile place ya kusell, now charge the output tax. Then after charging the output tax, the output tax una charge customers wako. Input tax ulikuwa umechajiwa ushalipa. So claim back your input tax and give the government the balance. And that's where this concept is coming in. Receive from your customers, ukiuza. Don't give the government the whole figure. Claim what you had paid while buying. So after claiming what you had paid while buying, now the balance that remains, that is what belongs to the government. And within that concept, you as the trader, you suffer VAT. You have a pay with paying VAT as a trader. Actually, you don't have any pain. So when you come accounting officer, but ule mwenye anasaka ni nani? the final consumer. Because there is no way at a claim. You and me going to the supermarket buy that yogurt because you want that instead of Madura fresh, charge you a VAT. But there is no way we are going to do it. Claim. That's how. Your supermarket it receive VAT from us. Na kwa sababu ilinunua hiyo yogurt. Ile VAT ililipa ikinunua, it is allowed to recover. Then anything that remains on top is what is now paid to the government as VAT pay. That's how. So if you are given a chance as a trader to register for VAT, would you go for it? Come on, you should go for it. What are the benefits of VAT registration? By the way, because we also learning other than doing the exams. Now you're becoming a tax consultant. Umekutana na mtu ameregister kampuni yake, alafu anakuuliza by the way, should I register for VAT ama niachane nayo? Nimesikia mkisema mtamwambia register for VAT. Alafu anakuuliza why? Alafu namwambia you can claim the input tax. That's very important. Only registered persons are required to claim the VAT that they were charged while buying. And if you're not registered for VAT, the government should not get you charging VAT. Because if you charge VAT, not register for VAT, unalipa na. That means it's not reflecting in your iTax, right? So that means you're stealing. So for you to charge VAT, you must have registered for VAT. So if you've not registered for VAT, inamaanisha kuwa ukinunua ulichajiwa. Right? Now ukiuza haucharge. So there's nothing you're covering. So to you are suffering. To you are suffering. That's why it's always important to charge the VAT. Not young show. Number 5. Point note number 5. Restriction of input tax. Restriction of input tax. Restriction of input tax, we say, it is where a registered person, deals in both exempt and vertible sales. Deals in both exempt and vertible sales. Stop. Input tax shall only be claimed in full. Input tax shall only be claimed in full. Input tax shall only be claimed in full if exempt sales do not exceed 10% of total sales. If exempt sales do not exceed 10% of total sales. Then next, where exempt sales are more than 10% of total sales, where exempt sales are more than 10% of total sales, input tax shall be restricted. Input tax shall be restricted using either proportional method, or allocation method. or allocation method, depending on circumstances, using either proportional method or allocation method, depending on circumstances. When you say under proportional method, just put full stop and comma. You say input tax claimable. I'm going to explain it. Input tax claimable equals to taxable sales divided by total sales. Taxable sales divided by total sales. You multiply by total input tax. So taxable sales over total sales times the total input tax. Of course, where taxable sales equals standard rate plus zero rate sales. Taxable sales equals to standard rate plus zero rate sales. Left total taxable plus exempt. Yeah. Then let's see how to deal with the allocation method. Then you say allocation method. Allocation method is used where there is an account. There is an account of items that were bought and sold. It's used where there is an account of items that were bought and sold at standard rate. Account of items that were bought and sold at standard rate. So they are not mixed up. You know, the concept of restriction is this. Tuna appreciate kuwa, tukinunua hizo items tulichajiwa VAT. Tulilipa the input tax. Alafu wakati tunaziuza, tumezi-exempt. Gavazi wajinga. Sasa, tukinunua tulichajiwa VAT, tukiuza tumezi-exempt. What are the impact of that to the government? You're going to claim more than what you are receiving. Sasa, so because what you are receiving is less, let us also find a way of reducing what you are supposed to claim. That's why you talk about restrict. To restrict is to reduce. Ukinunua ulichajiwa VAT because they were not exempt. Ukiuza umeamua kuzi-exempt. So to the government, we are losing if we don't do something. Sasa, now, sometimes you have a scenario whereby examiner anatuambia, out of those items, maybe 2 million of our purchases, 2 million of our sales were bought at standard rate and were sold at standard rate. So inamaanisha kuwa hizo 2 million hatuna shida nazo. Ukinunua hizo ulichajiwa VAT, ukiuza umecharge VAT. We don't restrict that part. So we allocate. That's where the name came from. Allocation. So allocate. So separate those items. Separate those sales which were bought and charged VAT and again sold and charged VAT. That's what tunasema. There is that account of items that were bought at standard rate and sold at standard rate. So continue by saying this. Just continue by saying this. Input tax relating on such items. Input tax relating to such items is separated. Input tax relating to such items is separated, and the remaining input tax is restricted using proportional method. And the remaining input tax is restricted using proportional method. And the total added together, to get total input tax claimable. And the total added together gets total input tax claimable. So let's check the past papers now. VAT of net has become a very common aspect of the setting. So we can, even last setting it was there. And 5C, the plus setting, right? So 5C of the setting before hours. December 2021, 5C. For Hotel Limited. Copy there. Question 5C, December 2021, 22, 22. December 2022. The sitting before hours. December 2022, sorry. 5C, Hotel Limited. Just page 6. Page 6 for those with page numbers. Now, Hotel Limited is a manufacturer of vegetable goods, and the company is fully registered for VAT purposes. That statement is very important. It has a right to claim the input tax and to charge VAT. It's registered for VAT. The company had the following transactions for the year ended at 1st December 2021, which included VAT at the rate of 16% where applicable. So are the transactions inclusive of VAT? Which included 16% where applicable still. So is of transactions to Conazo with 100% or 116%? 116, very important. But someone exclusive, then you're 100%. Inclusive, 100 plus 16. 116%. So you have sales at standard rate using output tax. Sales at 0 rate, still output tax like in 0%. Delivery van purchased, we charge VAT. We bought it, now you're prohibited. Exempt sales to Conazo. Purchases at standard rate, purchases at 0 rate. Rent for factory building, we pay VAT while paying rent. Yes, we do. Audit and accountancy, does it attract VAT? Yes, it does. Printing and stationery, equal VAT. The sales at standard rate include 20%, which is in respect of export sales to another country. Exports here only 0%. 0%. Purchases at standard rate include imported vegetable raw materials of 1.5 million, exclusive of duty at 25%. In case of an import, the value for VAT shall be the CIM plus the duty. Value for duty plus duty. The company confirmed that the value of goods purchased at standard rate and sold in the same state amounted to 2 million in the course of the year. Are you seeing our last point? So the amount that was purchased and sold at standard rate amounted to 2 million. So tunaweza pata VAT relating to that amount during restriction. We shall see how to deal with it. Budgets recovered previously written off amounted to 40,000. Is it an income or an expense? It's an income. It's budgets recovered. Still, it's an income. So hiyo ni sawa na ile swali uliuliza. But now sasa hapa tusha claim the bad debt relief. Alafu tena customer akaamua akaonekaniwa akalipa. So you have to go again and charge. Sasa compute the following for Popote Limited for the year 2021: input tax claimable, output tax, and VAT payable or refundable. So we shall deal with all of them at the same time. Let's start with the output tax. Just have a schedule. Wanasema we kill many birds with the same stone. So hapa tuko na the schedule, nature of item, value for VAT, VAT rate, and we have the VAT amount. So value for VAT can have it in shillings, the rate is a percentage, the VAT amount is in shillings. And one thing that you are thinking in your nayo, value for VAT must always be 100%, not 160. The amount upon which VAT is charged. Ukiweka 116%, hiyo mambo ya 10% test, hiyo restriction itakataa. So the value for VAT must always be 100%. So kama iko inclusive, lazima ucheze kama wewe, kurudisha kwa 100%. Sasa so hapo tuko na output tax about ourselves here. Wache space ya kutosha. Then we have another part here for input tax. Same concept. Nature of item, value for VAT, the VAT rate, and VAT amount. So this is shillings, percentage, and shillings. So we kill two birds with one stone. Tukipata ya inputs naweka mahali pa inputs, ya output naweka mahali pa outputs. Then I always prefer we start with additional information because it tries to correct to give further analysis of what is above them. Clear. Additional information ya kwanza, sales at standard rate include 20%, which is in respect of export sales to another country. Can we start with the exports? Exports, 20% of the 20% of 10,680. The figures are in thousands. Let's put them in thousands. Sawa. From your 10,000 pale, not problem. So how much is 20% of 10,680? How much? 2136. CO VAT yake ni 0%. This is Japan times 100 over 160. It's 0%, right? So ni exports. So VAT rate is 0%. VAT amount equal to. Kindly kwa VAT ukiweka dash na ni 0% unanyoroshwa. Kwa VAT kuna tofauti kati ya dash na 0. Dash is exempt. 0 rate is 0. Kuna maneno. Sawa. Kama ni 0 rate, kindly usikone mtu akusema 0 ni sawa na dash. Yes, but not under VAT. Sawa. Kwa VAT kama ni 0 rate, unaweka 0. Kama ni exempt, usiweke 0. Exempt ni nini? Dash. Because there's a difference between 0 and exempt in VAT. Hi. So can we have standard rate sales? So standard rate says 80% of 10,680. But sasa lazima fanya times 100 over what? So they were inclusive of VAT. So what is the value for VAT? How much? 17. 7365.5 and 16%. So your answer is 0.16. 1178.48. 1178.48. Then number 2, purchases at standard rate include imported raw materials. So we have imported raw materials. Equal purchases, you need input tax. So what is the cost? 1,500. Now input duty of what percent? So can I say that cost yake ni 125% of 1,500? So the value for duty plus duty. So meaning 1,500 is the value for duty. CIF. Alafu tuongeze duty at 25%. So can I say 125% to be its total cost? Lakini mtu akishafanya 125% of 1,500 bado sijaweka VAT. Because when I'm importing, kule mtu ananiuzia anajua hata VAT yake. So kwa 1,500 hakuna VAT. Sindio? Alafu nimefika kwa port, nimelipa duty. So those transactions are always without VAT. Kama una import. And that's why pande wamesema wameweka disclaimer where applicable. Inclusive of VAT of 16% where applicable. For imports, it is not applicable. So therefore, 125% of 1,500. What is the value for VAT? 18. So 1875 times 16%. How much? 30,000. 300. That is 16% of 1875 still. Right? So purchases at standard rate. We have the balance to represent standard rate purchases. So standard rate purchases per June, it's 7,200. So kwa hiyo 7,200 tutoe ngapi? Tutoe 1,500. But that one iko na VAT, so times 100 over 116. How much? 49.75. 79 times 16%. 786.21. That's okay. Note number 3 inakuja baadaye, inakuja the last step, ila restriction. Note number 4, bad debts recovered previously written off. Spec up for output. So bad debts recovered 240 times 100 over 116, giving us 0.90. 16%. That's 33.1. So additional information tumesort. Rudi pale juu sales tushadili nazo. We have zero rate sales. So zero rate sales. The figure is 2,400. VAT is 0% and the amount is 0. Delivery van, unaiandika for the sake of checks. We got the delivery van at how much? That's 600. Let me work in that it's prohibited. Prohibited. Exempt sales is equal to exempt sales of how much? Is it 4,800? The VAT rate is dash and the VAT amount is dash. Purchases at standard rate schedule nazo, we have zero rate purchases. Zero rate purchases of how much? 1,800. So 0% and 0. Rent for factory building. So rent, what is 1,200 times 100 over 116? How much? 1034. 16%.
165.
165.52. Gonna audit in accountancy. Tunalipia. So audit and accountancy 720, 100 over 116. Six. 680. 620. 6. 16%. 90. 99.31. Wengine imebaki printing and stationery. That is 960. 100 over 116.
827.
827.
59.
16%. 132. 241. So hizo story tumemaliza. So kindly give me output tax. Give me total sales. And give me total input tax. Hii rahisi kupata. $11.58. I think imeshai. Total sales. Kama nyorosho umesema. Hapa. 16.42. I don't need total of this. I just need the total input tax.
14.
14.
83.
45.
45.
Great. So, while doing all this, be very careful with this. Exempt sales. Why you have exempt sales? Then, before you claim this as your input tax, you need to confirm if the law requires you to claim everything. So example for non-exempt sales, we come back and talk about the 10%. 10% test. And how do we deal with the 10% test? We ask ourselves, what percentage is our exempt sales out of the total? So 10%, if we take exempt sales divided by the total sales times 100. How much will be the exempt sales? Exempt sales, let me copy. So 4,800 as a percentage of 16, 908.42. So how much do you have on the exempt sales? 58%. So roughly 28%. It's greater than 10%. So do you restrict or you don't restrict? We restrict the input tax. Because the other story to the where the exempt sales exceeds 10% of total sales, we restrict the input tax. Right? So we are supposed to restrict. Now, when we are restricting, now we go to note number 3. We go to note number 3. The company confirmed that the value of goods purchased at standard rate and sold in the same state amounted to 2 million. Right? So, tunaangalia the total input tax. Total input tax ni ngapi? 14. It's 1483.45. Then we less input tax not in the mixture. The input tax that relates to goods that were bought at standard rate and sold at standard, it has not been mixed up. Sasa hiyo tuko sure tukinunua tunachargewa VAT, tukiuza tunacharge VAT. We don't have to restrict that figure. Can you say 16 over 116 times 2,000? Sasa sales starting value for VAT, nataka VAT yenyewe. Transactions are inclusive of VAT. So the 2 million is at 116%. I'm looking for the 16%. So therefore, 16 out of 116 times 2,000, how much is that? 275. 0.86. So the difference now becomes input tax to restrict. So restrict how much? 1207.59. So can we have input tax claim? Purchasable sales divided by what? Total sales times total input tax. Total input tax claimable. That's total input tax claimable. So acha niwaulize, invertible cells. Can I get my invertible cells by taking this minus this? See total cells minus exempt. Cells number is invertible. So badala ya kuanza kufanyia hesabu this plus this plus this plus this, they can take the whole total cells minus exempt. So the difference is the variable, right? So that my variable cells becomes 16,908.442 minus 4,800. Using the variable. Total cells minus exempt. Then I divide by the total cells above only 16,908.42. Right? I multiply by input tax that I'm supposed to restrict of how much? 1207.59. So how much is that? How much? 864.78. 864.78, right? Then we add ile ambayo hatuko restrict input tax not restricted, so not in the mixture, which is of how much? 75.86, and that gives us total input tax claimable. So the total input tax claimable, and in Abuja, sing 11 something. 11.64. So here ndo kazi ilikuwa. Finally, can we have VAT payable? Output tax minus what? Minus input tax. Output tax yetu ilikuwa ngapi? 12. 1211.58 minus 1140.64. So anafaa nipe VAT ya ngapi? 70.94. 70.94. Now, even as we ponder about it a little bit, look at it. Kama hatunge restrict, singekuwa in the refundable position. Because input tax in 1.4, na output tax 1.2. So actually VAT yetu ingekuwa negative, meaning ingekuwa VAT refundable. So hiyo ndo ile ujanja inatumika na serikali siboroshe sana. So that when you are buying, you charge VAT. You also expect that when you sell, you charge VAT on it. If you sell exempt items, then lazima find out shall only exempt you, shall only exempt you from that process when the exempt sales are up to 10% of total sales. But if they're more than 10%, lazima tutafute ujanja wa reduce hii amount yenye unapo claim. Sababu nitafuta ujanja wa kufanya nini? Reduce your output tax. Any swali? Something that is doable? My words. I repeat my words. Let me repeat the concept, I may not repeat the exact words. Wakati ulichajiwa, wakati ulinunua, ulichajiwa VAT ya 1483. Ndio. Na wakati ukiuza exempt some items. Right? And that's why the output tax was less. So the government will not have issues with you only if your exempt sales are not more than 10% of your total sales. So if the sales exempted are up to 10% of your total sales, then tutakwambia okay, hazijapita 10%, claim everything. So, but if the exempt sales are more than 10%, then we need to find a way of reducing this figure. And how do you reduce this figure? By restricting. And how do you restrict? Using this approach. So the intention is that the government does not suffer because you pay VAT when buying and you exempted them when selling, and your exempt sales are more than 10%. Government atapata ujanja wa kuhakikisha the amount you're supposed to claim ndio ikate. Kwa sababu ile amount umecharge customers wako kwa ulifanya nini? Ulikata. Sasa, because if it doesn't do that, you can all confirm that itabidi government will refund. Because this minus this is the negative, so it will be VAT refund. Sasa, so is it something that you should cover? Or we check the second question first? Let's check the second question first. Question. Which setting? There is question there is question 4B of August. And 4B of August 2020. So Zawadi Associates, they're there, right? Taka break tunasema. They say they burn out very fast. In the semester imefika si mchezo. Especially kama tumeanza kwa first night. So Zawadi Associates provides consultancy services to various clients whose terms of contract allow clients to pay for the services either before or after the provision of the service. The following information is provided regarding the firm's transactions for the months of October, November, and December in the year 2021. So nature of service, audit services to XL supermarkets, value of service is 700,000. Service provision date 25th October, payment date 5th November. VAT ya mwezi gani hiyo? October, sio. Training services to clients in kila makai. Value is 240, provision date November, payment not yet. We claim in the month of, we must claim. Hata kama tujalipwa, sio. We must charge the VAT. So that one is in November, sio. That one is in November. Accountancy services to Watoto Children's Home. Watoto Children's Home, is it 0 rate? It's a privileged person. So VAT yake inakuwa 0%. Sio. So the value is 600,000, provision date 5th December, payment 20th November. In VAT here. This November date? November. Tax points. The earlier of the examiner ameleta concept of tax point. Whichever comes earlier. The worst that can happen in this question, where examiner anakuambia VAT for each month. Don't watu wanaweza jorosha hapa sana. Ya December wataleta, ya November watapeleka December, ya December wapeleke sijui wapi. So when is VAT due and payable? Whatever the month that comes earlier, between making the payments, goods or services being delivered, invoice being issued. Hi, debt collection services to Zuela. Service provision is in November, payment is still in November. What shida still. Strategic plan development in Rwanda, it's 0%. We are exporting our services, right? Exporting our services to Rwanda, but again, November, not yet paid, still VAT for November still. Management consultancy, provision in November, payment date 40% paid on 13th November, still not claim for November. Internal control reviewed, Lema Limited, in November it only provided the services, 10% was paid in October. So claim it in which month? We claim it in October. The date of payment, whether in full or partially. So in October. Financial consultancy services in November, payment in December. In November. Seal of Investment was declared bankrupt on 30th November 2021. Seal of Investment equal management consultants. So meaning, when you got declared bankrupt on 30th November, come on to live 40%. So the 60% you must claim as a bad debt relief. As a bad debt relief, so shall claim the 60%, right? It was declared in November, meaning we claim it in the month of November. It was declared in December, we claim in the month of December. On 5th November, Zawadi Associates renewed its National Industrial Training License of 30,000 and paid for legal fees of 360,000 to follow up on clients who are not paying as per the agreed debts. When you are renewing your NITA license, you change VAT on that. Small capital, still. You have VAT. Like in 360 consultants, lazima tulipe VAT. Yeah, we're also now bringing in services of some consultants. Electricity bill paid on 10th November was 270,000, out of which 100,000 was payment for outstanding bill for October, and 20 was in respect of additional deposits as demanded by the power company. So the 100,000 shall attract the VAT. What about the 20? When you pay the deposit, it's more capital. You're high VAT. That's more capital because of the also like small capital. Fuel consumed for partners vehicles amounted to 90,000 during the month. Fuel prohibited. Partners. Computers purchased for business use cost 40,000. Computers is prohibited. Right? Zawadi Associates paid rent for the month of November amounting to 180 on 5th November 2021. The transactions have been stated inclusive of VAT at the rate of 16% where applicable unless otherwise stated. So again, the transactions are at 116% inclusive. Compute the VAT payable or refundable to Zawadi Associates for the month of November 2021. Only 1 month of November 2021. Wow. This is the question you check to question 5. If you have an alternative question, right? But if you don't have an alternative, it's now. So you don't have an alternative for now, right? So these are the one. Haya, tuchore sheria. Na hapa sijaona exemptions. Kwa hivyo hizi shida tumekuwa nazo hapa tumeexemptiwa. Sasa sisi ni kuangalia hizo transactions ziko hapo juu. If there is any transaction that relates the month of November, we incorporate. That napata 7 months. We incorporate. So you can check it out. So you have the output tax, the input tax, nature of item, value for VAT, VAT rate, and VAT amount. Then round we can just have the shillings. Maybe we can start with additional information. So ya kwanza ni silo was declared bankrupt on 30th November 2021. Sio ni ya November. So budget should inafaa ipunguze tax rate. But by the way, it is reducing our output tax, not increasing our input tax. So you put it under the output tax, but as a negative. So remember, you're not preparing the VAT account. VAT account is a baby class. Apart from advance. It is not increasing your input tax, it is reducing your output tax. So now you can under output tax, but in brackets. So you can call it budget relief. So the budget, is it 60% for 1440? Times 100 over 116. So 40% will probably come. So if we declared bankrupt, come on, deliver 60%. So what is the value for that VAT? How much? 61? 724. 724,000. Page 3. The 715,000 sus. So page 3. Now you look at brackets there. 16%. How much? 119.17. 119.17. That's okay. Let's pretend now you're not Manzalinayo. You're not Manzalinayo. Hiyo information ya huyo nani? Ya huyo silo. Because something ilikuwa offered in November, payment partially kamekuwa in November. So therefore, we have silo limited. side of investments. So you have 1440 times 100 over 116. So you check VAT on the whole of it, but to claim the relief on the 60% that was never recovered. So the total value for VAT, how much? 12.1.38. 16%. 3. 198.62. 198.62. So out of the 198, 119 will be able to a relief. That's that. They will for a relief. So they want you to show that. They want to show that. So that first of all you claim everything, then you discover out of that VAT, there's an aspect of it that will never be recovered because this person has been declared bankrupt. Note number 2, on 5th November, Zawadi Associates renewed its nature license and paid for legal fees. So we have legal fees. So legal fees. Did you pay 360? Will you pay in November? We will be in November still. So 360 times 100 over 116. VAT further to margins to 10. 10.3. 16%. 49.7. 49.7. Note number 3. Electricity bill paid for 10th November was 270,000, out of which 100,000 was payment for outstanding bill for October. Payment for outstanding bill of October, and 20,000 was in respect of additional deposits. Now, outstanding bill of October.
No, and you were in
yeah, Nita kama nikiweka unaweka payment to Nita, unaweka the figure, then you put dash. Dash. Same ukiongezea jinsi za mzani. Haya. Sawa? So electricity 100 K in year October. In year October. Was an invoice issued in October? Bill ya October electricity, invoice kutoka October ama November? Invoice kutoka November, sio? Si invoice inatoka after consumption. But invoice inatoka before consumption. It's after, right? It's after. Payment was done in November. Invoice was issued in November. Services were delivered in October. So that bill is so that VAT should be payable in the month of October. So I enjoyed the services in October. So enjoyment of services came earlier. So the VAT should be for the month of October. So you 100K, we don't claim it in November. Still. How much we claim in November? By the look of things, nothing. So the total is 270. Now 270, 100 near November, October, alafu 20 near additional deposits. Kuna balance in the back. 270 minus 120. 150. So to claim for 150. That's in here half. So electricity. So 270 minus 120. There is 100 over 160. So value for VAT. One to 9.31 times point 0.16 20.69 20.69. Examine hapo na hiyo ujinga sana. Anakoroga maneno. Ana mix anaweka kitu mwitaji. Na koroga Kiingereza sana. Fuel concept for partners vehicles amounted to 90. I don't think we should even write that one. Because it was not even an expense for the business, it was for the partners. That's not even an expense for the business, right? So you are touching on now. Computers purchased for business. The value of computers to 40, lakini 20 dash. Zawadi Associates paid rent for the month of November. So rent 180 times what? 180 times 100 over 116. 154. 155. 5.7, 16%. 24.83. Transactions are inclusive, so additional information to the sort. Then tunarudi pale juu. Ya kwanza ni audit services for in October, sio sinikelele. Training services ya kai sini November. So training services tuliwa charge. You are consultants, ndio. So hapa tuko na kai associates. So 40 times 100 over 116. 6.90. 16%. 33.1. Watoto children's payment imekuwa in November. Hiyo si VAT ya kwa mwezi. So watoto children's home. In the 0%. The value for VAT becomes then 600. VAT rate inakuwa 0% and the amount becomes 0. Debt collection services in November and November. So Zuela computers. Zuela computers in 20 times 100 over 116, giving us how much? 706.9 times 16%. One 13.1. So Venezuela, strategic planning, so Bazo in Rwanda. So the value is 2150. The rate is 0%, right? The amount is 0. See a side of schedule now. Side of schedule now is here. We have Lemon Limited. Lemon Limited, 10% paid in October. Yeah. It was paid partially in October, VAT October. So the earlier of when payment was made, either in full or partially, right? Then W limited in accordance with India. So W limited 1200 takes 100 over 116. Right? 1034.48. 16%. 165.52. So tumemaliza. Hii haina kurestrict. Hakuna mahali kuna exempt cells. Kama kungekuwa na exempt cells, ile kelele mingi ya pale ingetuichapa tena. Kwa sasa hapa hakuna exempt cells. Simply have your output tax and you have your input tax. How much? 391. 391.17. Right? Now here are inputs 90, 95.19. So that our VAT payable becomes output minus what? Output tax minus input tax. 391.17 minus 95.19.
That's great.
The money input, the rounding off, yeah. The rounding off. You're getting 95.2. 0.22. So change here, put me on the pattern. Then we have our VAT payable there. Look at the last part. Look at the last part of that question. The last part we're being asked, we're being told that Zamani Associates is planning to engage the firm of financial management consultants from South Africa to facilitate online training on financial management assignments. So can we say that they want to import a service? Can we say that? They want to import a service. You want to consult them. It's meaning to kuwalipa. So you have to kuwalipa ni kama tunanunua. So we are importing a service, right? We are importing a service. And that's why we are being asked, advise the wording on the tax point in respect of such services. So in case of an import, what is the tax point? Then inaanza na day. Huh? Pia tusizungumzie yeye ya kuzungumzia month. Because pia it is monthly. So the tax point is the area of. Kumbuka wajiuliza value for VAT. Pia kwa kuna confusion ya value for VAT. They're not asking about the value for VAT, they're asking about what? The tax point. Ingekuwa value for VAT tungewaambia the CIF plus the duty. Ndio. But sasa wanauliza the tax point. At what point we consider that VAT is due and payable? The earlier of when the service is now, because we're importing a service with specific these questions here. When those services have been delivered, right? When an invoice is issued and when payment for the services is made, either in full or partially. So the tax file shall be the earlier of the tax file shall be the earlier of the tax file shall be the earlier of number A, when services were rendered, when services are rendered, because we are thinking of doing that, so it's more future. When services are rendered. Number 2, when payment for services is made. When payment for services is made, either in full or partially. Either in full or partially, alafu ya mwisho when invoice is issued. When invoice is issued. Sorry. Then? Yeah, I'm giving it. I saw it. I saw it. I'm giving you a break. But even as I give you a break, siwaambie swali moja. Si ati hata mfanye, mwangalie. There is question 4B. Hiyo sitting nyingine. That one looks like so. April 2022 question 4B. We can work on that one after a short break. It's also December 2021 question 3 So April 2022 question 4B. The following information relates to 2 businesses which are registered for VAT purposes. No problem. Beba supermarket, they operate a soft drinks dispensing machine which uses special tokens which resemble coins. During the month of July, the machine dispensed drinks worth 300,000 inclusive of VAT. This dispensing machine is loaded with tokens after every 1.5 months. That is, on restocking drinks in any month, the tokens are emptied midway the following month. The machine was restocked during the month of July 2021. Hi. Super Bread Limited. The firm bakes ordinary bread during the month of August 2021. They made sales amounting to 20 million, excluding VAT. They have arranged with the distribution company who ensure bread is delivered to customers. The distribution company raised an invoice of 2 million for services rendered for August 2021. Electricity company also sent Super Bread Limited a bill of 3 million for the month. The firm also had advisory services from an overseas company and were billed 1 million. The above figures are quoted inclusive of VAT unless stated otherwise. For each of the 2 companies for otherwise stated, compute the output VAT, if any, for the specified period. Now output VAT. Depends on Beba, right? Beba. So information here, Beba, is it inclusive or exclusive? And they don't want the value for VAT, they want the VAT. Senior. And is it 16%? It is 16%. So can I say 16 over 116 of 300,000? Wanataka VAT, wataki value for VAT. So what is the value for VAT? What is the VAT? So output is the VAT on sales. 16 over 116. $49. 379. 0.31. Then super rate. The 20 million, is it inclusive or exclusive? So 16 over 100 of how much? Of 20 million. 16% of 20 million. The 20. 3.2. So you have to go max million. Because the price is inclusive of VAT. Check the story of 300,000 inclusive of. So the 300 is not 100%, it's 116%. Because people are VAT ndani yake. Lakini 20 million ya 100% because haina VAT, it's exclusive. Sasa. Haya. Now part 2, the input VAT for super rate. So input VAT wataka ya super rate. Beba hana input, tutapewa the figures. So tunaanzia wapi? There's a distribution company that was hired, still. So can we start with the distribution services? We are interested with the VAT, 16 over and over 116. And over 100. The transactions are quoted inclusive of VAT. Na statement ya mwisho. So how much is that?
20.
320 euro.
Oh.
275. 863. What was the examiner testing in this question? Inclusive, not exclusive. Inclusive, not exclusive. So I hope I will mix up. I hope when you see a question of this, you're happy. It's not that you're sad. That you know this examiner will clearly. Do you have electricity? Is it also inclusive or exclusive? It's inclusive. Billion, how much? 3 million. 16 over 116 times 3 million.
413.
413. 793. The firm also had advisory services from overseas. So imported services. And they were billed 1 million. So 1 million, is it inclusive or exclusive? Inc or X? Now an overseas company billing us. Haiongezangi VAT, hata haijui VAT tutakaje. Sindio? So that one is always, kwa sababu tulisema imports, they're always exclusive. So don't wait to be told. So this one becomes now just import duty, but we're not charging any duty. You don't have the rate, right? So 16% of a million. This one I know. So input VAT. Total ikuja ngapi? $849,655. Great. Then finally for 2 marks, the VAT payable for specified period on the information provided. So VAT payable equals to output tax minus what? So output VAT minus input VAT. So for Beba, output ni ngapi? For 2379.31, input ni ngapi? Sasa tunakuwa na 379.31, hiyo yote ipe. Then super bread output is 3.2. Input ni 849,655. Sorry, 20? 28. 23,350. 23,350. 345. Actually, kwa hiyo nyingine basi tumalizane na hii story. What is the reverse charge? Any idea? Any smart guess? Reverse charge? What's the reverse charge? Any smart guess? There? Where you can. Wait, say something. Your guess might be right. Reverse charge. You see these people called VAT withholding agents. VAT withholding agents. Ukiwauzia sio wanajicharge VAT, alafu wanapeana kwa serikali. So that's a reverse charge. It's where your customer charges himself the VAT alafu can remit to the government. So it's the opposite person who is now, it's like umeniuzia badala ya mimi kulipa hiyo VAT na withhold hiyo VAT alafu nipelekea serikali. So it's a charge that is a reverse. So let's make a statement out of it. So you can just say a reverse charge arises when a withholding VAT agent. A reverse charge arises when a withholding VAT agent charges the amount of VAT, on goods purchased, and remits the amount to KRA. So kwa kawaida wewe mwenye umeuza ndio unafaa ucharge VAT. Lakini sasa hapa mwenye umeuzia ndio anacharge VAT. Alafu badala ya kukupea hiyo VAT anabaki nayo KRA. So you're doing the reverse of what is expected, just the opposite. So, just the opposite. So that might be something else. The other one of December. December 2021. Question number 3B. So, reward investments 2021. December 2021, question 3B. Reward Investment Company Limited, a company registered for VAT purposes, provided the following details in respect to the month of January 2021. Purchased goods on credit of 696, and for that one in cash respectively. It's only purchases. Purchases in inputs. Invoices were issued for sales of the 37500 non-VAT registered customers. When you said non-VAT registered customers, do you charge VAT? Yes, you do. If you let neighbors that services, they are registered. Buying from non-registered, that's when they are not supposed to charge us VAT. If you are not registered, you should not charge when selling. But not unauzia wale wenye register, hiyo ni sawa, itachajua VAT. The invoices issued included exempt sales amounting to 174,000 and the balance were at standard rate. When you're going to exempt sales, we start thinking about restriction. Purchased goods, sasa vile tumejua ni restriction, tutengeneze the shadings. So prepare a statement showing the following: input and output VAT, deductible input tax, VAT payable or refundable, comment on the VAT payable or refundable. Are the transactions inclusive or exclusive? Before required transactions are inclusive, clear. So transactions are 116% unless otherwise stated, clear. So output tax. Output tax. We have nature of item, value for VAT, nature of item, value for VAT. We have the VAT rate and the VAT amount. That is for the output tax. Then to an input. Nature of item, value for VAT, VAT rate, and VAT amount. Right. So you can start with note number 1, purchases. Purchases ni kwa input tax. Ndio. Get the total purchases, whether cash or credit purchases. Umenunua 696 plus 464 times 100 over 116. $1,000. That is 1 million here. 16%. Is it 160? Invoices were issued for sales of 371 non-VAT registered customers. The invoices issued included exempt sales. So we have exempt sales of how much? 174,000. So VAT ni dash. VAT ni dash. So exempt sales will go 174. The rest was standard rate here. So took on a standard rate sales. That is 371.2 minus 174 takes 100 over 116. Giving us 170,000. 16%. 200. Note number 3. Purchased goods of 672,800 from VAT registered business. However, goods valued at 139,200 were returned to suppliers. Can we have the purchases? So we just need the net purchases. 672.8 minus 139.2 times 100 about over 116. The net purchases. We will go to our share. How much is that? How much? For 16. 16%. 173. 73. Just 73. 73,600. Note number 4, Shida's Manza. Received a debit note. For erroneous invoicing of goods valued. By the way, after before transfer debit notes and credit notes. Received in a purchases and sales. Received is always purchases. Issued sales. We receive from suppliers and we issue to customers. That's how. So the first thing unaangalia, is it received or issued? If it is received, it's affecting the input tax. Whether debit or credit notes. If issued, it's affecting our output tax. That's how. So received, purchases. Issued, sales. Rather to appreciate your debit notes are meant to correct an undercharge or overcharge. That is going to charge. Debit notes correct. They correct an undercharge. So they're supposed to increase. So when we are receiving a debit note, then our suppliers are telling us that instead of paying us 600, we paid us 500. So kindly top up. So therefore, we received any input. So debit notes received. $73,080. $73,080 times 100 over 116. How much is that? The 3K. So here in our deposit, because it's increasing our purchases there. VAT yake iko ngapi? 1008. 1080. Then number 5, issued credit notes. So issued the customers. Customers in the output. So particular credit notes issued. $26,680. 100 over 116. $23K. Positive or negative? It's now operating an overcharge. It's a credit note still. So 16%. Sorry.
68.
That's 68. It's a negative. Settled electricity. Electricity inakuja huko chini. So electricity 32,480. 100 over 116. Sorry.
58,000.
28. 28,000, 16%. 4480. Settled audit fees. So audit fees 27,840. 100 over 116. How much?
4,000.
24,000, 16%. 3840, kindly put it there. Received credit notes. We received again, it's here still. So credit notes received. And you take care of that, it's a negative, right? Huh? Sorry? The most important thing is that we are receiving. When you're receiving, it's affecting purchases. So here, we are receiving, right? So here we actually that 840. Yeah, audit fees here. That 840. Credit notes passing. 62,640. 100 over 116. How much? 24,000. Sasa hii inakuwa kwa brackets 16%, 86, 8640, na hiyo pia ni negative. We received. Exported goods to Dubai, senior kuju. So I think 690. 0%, and you have what? 0. Imported goods from Zambia. The people are imports. The company imports, it's always without the VAT. That's what you said. So value for VAT for those imports, equal to 20% still. So, thank you. So can I say 120% of 250? Ongeza duty. So you have how much? 300. That is 0.16. 48K. Number 11, total goods sold as exempt supplies during the month amounted to 494,000. These supplies could not be priced from goods purchased at the standard rate. So we have exempt sales. Sasa hapa examiner tena na Kiingereza yake ingine make sense. Anasema kuwa zile exempt sales zote in total ilikuwa 494. Si already nishaweka 174. So hapa niko na 294 ni subtract ngapi? So how much more should I account for? It was 494. So how much more should I account for? 320. So that I have dash and dash. Somebody else can decide. Because total exempt sales should be 494. You have catering services. Catering services tuweke ngapi? Ni 58 lakini tuweke the restaurant services. So prohibited. A debtor for goods valued at 45 was declared bankrupt. To give a bad debt relief, what we do? So bad debt relief 45 to 40 takes 100 over what? Over 160. How much is that? That's 9,000. Now you negative still. 16%. So we are done. So support for the exempt sales, we need that. Thus, you do for me 10% test. Then can more than 10%, restrict input tax. If I you go over mixture. So this is direct proportional method. So VAT is output taxes.
17.3.
Sorry. 17.3? 17.28. 17.28 or 17.80. Total sales. How much? Six? 602? 92,000. Total input tax 291,360. So 10% test. Exempt sales divided by what? Exempt sales divided by the total sales. Times 100. So our exempt sales is 494. 494,000 divided by the total of 1292. Nasema ni ngapi 30? 38.24. So 38.24 is more than 10% still. So we restrict. So we have input tax claimable. Purchasable sales divided by what? Saizi katuna zile ambazo there's a trace. Ndio. Times the total. total input tax. Variable sales zetu ni ngapi? 1292 minus 494, right? So 1292 minus 494, that is our variable sales. We divide by total sales of 1292,000. That's the total input tax of 299. One 179 960. Yeah. So VAT payable output VAT minus input VAT. Output ni ngapi? 1728 minus 179 960. To get how much? Negative. So don't put a negative 162. Na unamwambia ni VAT what? So don't put a negative. Just appreciate that it's not not payable, it's now refundable. And I think there's a question that was asked hapo chini, sio? Comment on the VAT payable or refundable. Ingekuwa VAT payable, ningesema it's payable by 20th of the following month. Sio? That will be refundable. Does the government refund you? It does, sio? But after big effort. But it is never guaranteed. So we say that the refundable is carried forward to be offset against VAT for the subsequent months. So they only refund you if you are in if that is your common position. Kama kila mwezi kwenye refund position, then you cannot carry forward every month. So just make a statement and say this: the VAT refundable is carried forward. VAT refundable is carried forward to be offset against VAT. To be offset against VAT relating to subsequent months. It's carried forward to be offset against VAT relating subsequent months. So that is it with VAT. I'll not take a lot of time. Let's just take a 15 minutes. CGT, Capital Gain Tax. A small subtopic, Capital Gain Tax. Ziko sawa? Na umekoma mahali wapi? This is what after restricting. Sasa hatukuzispecify leo. So this is the total, this is the output tax, this is the total input tax. The deductible input tax is after you restrict. Sasa ile tumeita input tax claim. That's the deductible input tax after the restriction. So, Capital Gain Tax, CGT. We say it is tax charged. It is tax charged on gain, stroke profit made. This tax charged on gains from profit made, on transfer of capital items. Tax charge on gains from profit made on transfer of capital items, such as land, buildings, such as land, buildings, motor vehicles, shares, etc. Shares, share capital, amoite securities. Sasa ni ile part tunasema profit on disposal. And by the way, capital gain tax, there's a group of people who fear it, but it's very direct. When kuangalia tu nilinunua at how much, obviously kama ni fixed asset nimenunua, probably ime depreciate. Baada ya kudepreciate, nimeongeza value yote kwa hiyo asset. Baada ya kuongeza value, naiuza at how much? Am I selling at a profit? If I'm selling at a profit, I charge the CGT. Currently, it's at the rate of 5%, although kuna court battles. So, the court battles, but for examination purposes, we go with 5%. Just make CGT is charged. CGT is charged at the rate of 5%. CGT is charged at the rate of 5%. Tuone swali. Sitting before hours. Question number could be, and let's check it out. Definitely to board. So you have some 6 months for us to get there. Now, Zamzam Company Limited. Zamzam Company Limited purchased the property whose cash price was 1264,000. So cash price was 1264,000 under the following terms. The deposit paid for the purchase of the property was 400,000. The balance of the purchase price was to be paid over a 3-year period at a monthly installment of 40,000, inclusive of 16,000 per month as mortgage interest. So interest on loan, invest in a fixed asset, sinapanga capitalist, becomes part of the total. So to a mortgage on interest, that can be installment, still unless. Assuming the property was sold as follows: option 1 for 2 million after payment of 24 installments. Alafu ingine for 2680 after full payment of all the installments. Cost of valuation was 54,000 and legal fees 72,000. Calculate the capital gains tax under each option. So gain on disposal. That's an option 1. Option 1. We have some sales profits. Tumeuzana how much? Tumeuzana 2 million. Sindio? So after selling at 2 million, tuangalie costs zingine. So they will less the costs. The cost relating to that building, we have deposits. Tulipa deposit ya ngapi? Lipa deposit ya 400k. Sindio? It will also pay for the installments. So installments, how many installments can we make by the time to use it? 24. So 24 times 10 times 40. Right. Monthly installment of 40k. Inclusive of 16,000 per month here. So I can call it installment plus interest here. Installments and mortgage interest. Because kwa hiyo 40 siko inclusive of the mortgage interest. Wako ndani. How much is that? Sorry? 960,000. 960,000. There is no any other costs here. So this is how much? 1360. So we have gain on disposal. So capital gain. So we made a gain of how much? I think 640. So can we have the CGT, capital gain tax? So 5% of 640. How much? So 32,000. Getting option here first. Option 2, the same approach. We have sales proceeds. Under option 2, to receive how much after selling it? 2680, right? So it's gonna be 680. So less the costs. We have the deposit. Tulipa deposit ya ngapi? 400,000. We have installments. Installments and interest. Installment of how much? How much per installment? For how many installments? 36 here. So 40,000 times 12 times 3 years. So 40 times 36. 40. 1440. Right? We need also to pay some other costs of valuation. So tunaongeza valuation cost. Ile value na pesa ngapi? 54,000. Alafu tuko na legal fees. Pia ni cost nilipa. So legal fees of how much? 72,000. So get the total cost and get the capital gain and you get the CGT. Tunamaliza hiyo sura. Final paper of December 2021, question 4B. December 2021, question 4B, pilot paper. So but nikuuliza explain circumstances under which a tax agent's license may be cancelled. Page is 29. Page is 29. Circumstances under which the tax agent's license may be cancelled. Request, at the request, yes, it's true. Any other? When he engages in tax evasion. What are the circumstances under which it can be cancelled? Court order. Sons of Fikiria. Any other? When there's some complaints from taxpayers that he represents. For the tax agent is simply a representative of the taxpayers. So when your clients are complaining too much about your services, when the tax agent fails to file the returns or gives some misleading information, so you can reason around that. Any cha muhimu huwa nasema, like now, if you know what a tax agent is, hufai kuanguka swali kama hilo. So try to analyze and try to interpret what the question is asking about. From that, you can get it right. Bandari read or summary what? Limited provided the following information relating to the sale of the property in the year 2020. Sales proceeds were 2 million and the incidental costs were legal fees 100,000, advertisement 50, agents commission 200, and valuation is 150. So just any costs. Cost of acquisition and construction was 1.5 million and other relevant incidental costs were as follows. Legal cost on acquisition, valuation, cost to change the roof of property, legal cost to defend title, investment allowance. So hizo zingine zote ni expenses. Lakini investment allowance doesn't income to us because it reduces our liability. Reduces our income and depreciation. Yeah. So they want us to get the CGT. No problem. So again, we can use the same approach in shillings. You can put it in thousands of shillings. We have sales proceeds. So sales proceeds, by saying 2 million, that is 2,000 here. Then we less the costs. Turns in incidental costs. Incidental cost to a legal fees. Legal fees yangapi? 100. Advertisement. Advertisement is 50. Agents commission. So commission here, so valuation 200. Commission is 200. Valuation now. Valuation here 150. Those are the incidental costs. How much are those? 500. 500. Sindio? Tuko na acquisition costs. We have the purchase price. Okay, acquisition cost ni ngapi? 1500, sindio? Kwa hiyo 1500, I can less capital allowances. So I less capital allowances. So it lose value. If it lose value, it reduces its value. It reduces its value. So I charge capital allowance of how much? So value yake kabaki ngapi? It's 1050. So tuko na other costs. Other relevant costs. Legal costs. Legal costs on acquisition. Of how much? 60. Valuation. Valuation is 70 still. Change of roof. Recurring and costs still. Of 100 and 130. Do you have cost of defending title? Tunaangalia kama successful. Hapa kuna mambo ya successful. We incur the cost. We need to see if we sold this at a gain or at a loss. So truly defend nanga 50. Tumemaliza. So zikuja ngapi? Sorry. 310. So we have the capital gain. Capital gain of how much? 140. So when we have the capital gain tax, 5% of 140,000. So I think that is it. And this come up plus one, you can stop there. We are left with there is the capital statement and there is a double taxation. So let's fight with them on Saturday. I'll have to go and come as a college semester so that we go and pass these exams. So I think when you pick up by them, after what. And the easiest way to know if you covered a lot, how I always evaluate myself, and I encourage our students to evaluate themselves this way. You look at your past paper, then you ask yourself, in a given sitting, hata ufunga sitting yote, unaweza fanya maswali kama 3 size. At least 3. Sindio? So msiogope hizo past papers. Unaweza funga page yote na sitting yote na ukajitest. Yeah. That's how I told you the syllabus of tax is a little bit funny. If I give you the syllabus, you start wondering, come and give it. But with some little experience, you know how to approach it. So so far, I think so far so good. By the time we finish Saturday, you should be able to do all the 5 questions in the city. So Saturday kuja ni threaten na theory. Kama ushaipitia skill. Maana mna gani?